My father spent 30 years behind the wheel as a truck delivery driver. 30 years of waking up before dawn, battling the weather and working tirelessly to build a better future, only to retire broke. Let that sink in. Why? One critical mistake that too many of us make. He never invested. This is the story of how I learned from his experience, overcame my own fears and took control of my financial future. By the end of this video, you will have the tools to avoid the same heartbreak and start building lasting wealth. Don't let this happen to you. I used to think saving money was the ultimate financial strategy. Just work hard, save little here and there, and one day, everything would fall into place. But life has a way of teaching us the hard lessons. This lesson hit me very hard when I thought about my dad. My father was one of the hardest working men I have ever known. For over 30 years of working as a truck delivery driver, he never complained much. He believed that hard work would pay off. Growing up, my dad used to say, "Michael, work hard, save money, and avoid debt. That's the secret to success." And for a long time, I believed him. But as I got older, I saw the cracks in that plan. My father saved every spare penny. He skipped vacations, never bought anything fancy, and said the fancy life is after retirement. He believed his hard work and saving would lead to good life. But when he finally retired, reality hit like a brick wall. Inflation, a silent thief, had eaten away at the value of his life savings. What should have been enough to enjoy life was barely enough to get by. I will never forget the day he told me, "My son, I worked hard, but the money didn't work hard for me." That broke something in me because I know my father deserved better. He deserved to relax and enjoy the fruit of his labor, but inflation had quietly stolen those dreams away from him. I realized I was heading down the same path, saving every penny, avoiding risk, and hoping for the best. But then I thought, what if I ended up like my dad? That fear pushed me to learning about investing. I'll be honest, at first, investment terrified me. The stock market felt like gambling with my future. What if I lose everything? But then I discovered something powerful, the S&P 500. It wasn't about picking risky stocks or becoming a financial expert. It was about trusting the growth of the top 500 companies in America. And that decision changed everything for me. I'm supposed we've understood the picture I'm trying to paint with my dad's story. But if not, let's switch gear. Today I'm diving into something that could have changed my dad's financial story and was gradually changing mine, the S&P 500. It's not just a buzzword. Is a powerful world building tool that has stood the test of time. Here is what we are going to cover in this video. Number 1, what is the S&P 500 and why does it matter? If you've ever wondered what S&P 500 is all about, this session will clear it up for you. Number 2, why so many people swear by it as the foundation of their investment portfolio. You will discover the reason why S&P 500 is often called the backbone of the stock market. Number 3, stick around until the end of the video to uncover a surprising fact you won't want to miss. Alright, let's start with the basics. What exactly is the S&P 500? The S&P 500, short for Standard & Poor's 500, is like the VIP club of the American economy. It's a collection of the 500 largest publicly traded companies in the United States. These companies come from all industries like technology, healthcare, finance, retail, energy, and even more. These are companies you probably know and use every day, like Apple, Amazon, Tesla, Facebook, which is Meta. Here is why it matters. When you invest in the S&P 500, you are not betting on one company. You are betting on the entire economy, and the numbers don't lie. Over the past century, the S&P 500 has delivered average annual return of 7 to 10%, even with market crashes along the way. That means if you invested £1,000 in it 30 years ago and let it grow, you could be looking at over £10,000 today without lifting a finger. Think of it like planting a tree. You are not watering it for tomorrow. You are building a forest that grows over decades. And what makes it interesting is, you don't need to be a Wall Street genius to invest in it. Still skeptical? Let me give you an example. Ever heard of Warren Buffett, the legendary investor? He once made a $1 million bet against hedge fund managers that the S&P 500 would outperform their expensive strategies over a decade. Guess who won? The S&P 500 crushed them with a 7.1% annual return. Warren Buffett himself have called the S&P 500 the best investment most people can make.
Buy an S&P 500 low-cost index fund. Keep buying it through thick and thin, and especially through thin.
If the greatest investor of all time trusts it, then I don't know what else to tell you. So why does many people swear by the S&P 500? You've probably heard this saying, don't put all your eggs in one basket. I believe that statement was made for the S&P 500. Instead of buying individual stocks and stressing whether company A will do well or company B will fail, you are essentially buying a little piece of 500 companies all at once. Trust me, that's instant diversification. If one company doesn't perform well, the others in the index can balance it out. You're not relying on a single stock to grow your wealth. Buffett famously said, if you don't want to actively manage your investment, just put your money in a low-cost S&P 500 index fund. And over time, you will outperform most individual investors. Let me make it relatable. Imagine your friends are hosting a barbecue and everyone brings their favorite dish. You don't know what's going to taste best, so you grab a plate with little bits of everything. That's what the S&P 500 is your plate of the market best options. And here is the beauty of it. The S&P 500 represent companies that are constantly adapting, innovating, and growing. If a company underperforms for too long, it gets removed and replaced by another stronger one. It's no wonder most people trust it as the foundation of their portfolio. So why do financial experts always recommend the S&P 500? Number 1, proven track record. The S&P 500 has been around since 1957 and over the past few decades is delivered an average annual return of 7 to 10% if you factor in inflation. Number 2, low effort, high reward. You don't need to be a stock market expert to invest in the S&P 500. Unlike buying individual stocks, you are not trying to guess which company will do well. Instead, you are investing in the collective growth of 500 companies in America. Think about that. Number 3, the power of compounding. Many people don't know that the secret sauce to building wealth is compounding. When you invest in the S&P 500, your money earns returns, and then those returns also earns returns. Over time, this creates a snowball effect. Now, this is the part you've been waiting for. Number 3, a step-by-step guide to investing in the S&P 500 no matter where you live. Whether you are in the UK, the US, or Canada, I will show you exactly how to get started today. So number 1, choose a brokerage. A brokerage is essentially the middleman between you and the stock market. Think of a brokerage like your gateway to the stock market. Some great options I personally recommend are Vanguard and Trading 212 if you're in the UK, Robinhood or Fidelity if you're in the US, and Wealth Simple if you're in Canada. Choose a platform that is easy to use and has low fees. Personally, I recommend Trading 212. It's super beginner friendly and transparent with no hidden fees. Step 2, search for the S&P 500 index funds. Once you've set up your account, look for index funds or ETFs that track the S&P 500, like Vanguard's VUAG, which is what I personally use. These funds do the hard work for you. It mirrors the performance of the S&P 500. Step 3, start small. You don't need a fortune to start, because I've realized that this is where people get stuck. Many platforms let you invest as little as £10 or $20. The key is consistency, not perfection. Remember, this is a long-term game. The earlier you start investing, the more time your money has to grow through the magic of compounding. Number 4, set it and forget it. This is where I've messed up earlier on. I used to check my account daily, panicking every time the market dipped, which led me to withdrawing my money, and guess what? The market went up again, leaving me at a loss. But here is the truth. The stock market rewards patience, not panic. So invest, automate your contribution, and let it grow. So far, we've covered what the S&P 500 is, why it's so popular, and the step-by-step guide to getting started. Now, let's dive into some common questions and concerns. Number 1, what if the stock market crashes? Market crashes happens, but they are temporary. Historically, the market has always recovered and reached new highs. A great example is the 2008 financial crisis. In 2008, the S&P 500 plummeted by over 50%, hitting rock bottom in March 2009. Investors panicked as banks collapsed, unemployment soared, and the economy went into deep recession. However, those who stayed invested saw an incredible rebound. By 2013, the S&P 500 had fully recovered and reached new all-time highs. This pattern has repeated throughout history. Whether it was the dot-com crash of 2000 to 2002, the COVID-19 crash of 2020, or even the Great American Depression of 1929, the market has always bounced back stronger in the long run. Number 2, can I lose all my money? The S&P 500 is one of the safest investments because it is diversified across 500 companies. While it's not risk-free, it's always far less riskier than betting on individual stocks. Number 3, is now a good time to invest? The best time to invest was yesterday. The second best time to invest is today. Don't wait for the perfect moment. It just doesn't exist. So there you have it. The S&P 500 explained step by step. It's simple, it's effective, and it's something that anyone can do. Now I can't help but think, if my father had this knowledge, his story might have been very different. But the good news is, it's not too late for you and me to write our financial future. So, you've mastered the basics of investing. Now let me show you how to keep more of your hard-earned money tax-free. Click on my video here for a detailed explanation of how to maximize your returns and avoid unnecessary taxes using ISA's account.